All right, everybody. It is Tuesday, May 28, 2019, and this is what's happening right now. As I'm doing this video blog, stocks are higher. Little rally on Wall Street. Metals are getting hammered. And what does it all come down to? Let's see. Something I've been talking about since forever. It's all about the debt market. The debt market being the bond market. We are in a very interesting environment. And it's been going on now for over an entire decade. Artificially suppressed interest rates have created distortions in this market that are truly beyond belief. And what we're seeing now today is a classic example of that. So look, it's no secret, and this is how it works. Artificially suppressed rates boost stocks. It creates malinvestment, bubbles to the upside, inverse bubbles with regard to metals. Nothing is real. Now again, let's use today as an example. The U.S. 10-year yield, I just checked it a few minutes ago, was 2.289. It continues to drop. I can't stress to you how important it is to watch the bond market, more specifically the 10-year yield. It affects everything. Now, being that the 10-year yield is dropping, plunging, where is cash going to go in this environment? One place, the stock market. That's why stocks are higher. You know, people sit here and they scratch their head and they don't understand why stocks are higher, despite all of the bad economic news that we got over the weekend, last week. And they go, well, why are stocks higher? Because bond yields are suppressed. And again, President Trump called for a rate cut Saturday, another one. If he gets his wish, he will again get his wish, which is Dow higher, Dow 30,000. That's what he said. Take the man at his word. I have learned that the hard way. It's the truth. I refuse sometimes to believe that this market can remain as fake as it is. But again, in this environment, it's going to remain that way. So, with yields being artificially suppressed and more to come, where do you think stocks are going to go? Lower? No. Just like I've been explaining. Up, 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 up. Okay? Doesn't matter what's going on with the economy. Doesn't matter that manufacturing is falling off a cliff. Literally. Industrial production diving. We're exporting less. We're importing less. Money velocity at a standstill. It's an incredible thing. But that does not mean that stocks are not going to go higher in this environment. Now, with regard to metals, the most rigged game in the history of the world, when the hard asset derives value from the derivative, they can do whatever they want to. So the slam down that you're seeing here with metals today, laugh at it. Because in the long run, it's very simple. It could not be more simple. Right now, we understand what's going on. The yield curve is inverted. The long end of the curve, the 30-year is also coming down. It is a clear sign that our economy is failing. And I cannot stress that enough. Our economy is failing. When you hear one person, I don't care who it is, on CNBC, Bloomberg, even the president, tell you that our economy is strong and our economy is booming, you're listening to a liar who is either, number one, trying to obviously manipulate you into believing things are better than they are, or they just don't get it. And they don't, maybe they're using the U3, the fake unemployment number, which I laugh at all the time, and I know you do too. But understand, in this environment, until we get a snapback in that bond market, and that's coming. Again, the yield curve is inverting. Who would want to, for example, right now, a 1 month is yielding much more than a 10-year treasury bill. It's insane, okay? Who would want to hold these kinds of things? Nobody in their right mind. So at one point, This stuff is going to get dumped. Stocks keep going higher while bond yields are dropping. What kind of an imbecile would want to hold a debt unit in this environment where stocks are only going up because the yields are being suppressed? Think about it, right? So at one point, we're going to get a snapback, and that is when stocks are going to dive and metals are going to surge. This is very simple. It's cause, effect. Cause, effect. That's it. So this is why I stress to you all the time, watch the bond market. I'm not saying this because I want you to just sit there and watch paint dry. There's a reason for it. You understand? All right, look, so that's the story about what's going on and how it's gonna play out moving forward. It could not be more simple for anyone to, number one, beat the living piss out of this market. I've already been in and out of one trade today, made a 10% profit. I'm planning on doing it again today. I'll probably have a stellar day in this market. Use my Ranko system. It's getting rave reviews, and it's 100% free. I don't ask for a damn thing, except for you to pay it forward if you do well. One person, who wrote to me so far has complained about it. A free thing. Well, I don't know how people do that, but okay, I guess it's not working for him or her. I don't even know who it is. Anyway, it's an it at this point. I'm not making fun of the person, I understand, but that's one person who isn't getting it to work yet. But everyone else is like, Greg, this system's incredible, and it's free. There's a link in the description of this video to an article I wrote that shows you exactly how to set it up. So beat the living piss out of this market. With regard to metals, good. Let them play the game. They're going to slam metals. Good. We're going to buy it. We are going to use every opportunity like this to buy. We're going to watch that bond market. I cannot stress this enough. I can't. I don't know what to do. But people write to me, Greg, why are stocks higher? This morning, Greg, why are stocks higher today? Well, if you know my work at all, you understand you should be watching the debt market. When rates become suppressed, it opens a doorway for cash to go into the stock market. Period. Nothing else matters in this environment. Trade wars, economy falling off a cliff, don't matter. As long as rates stay suppressed, cash is going to go into the stock market. Pretty easy, right? Pretty freaking easy. All right, with that said, I'm going to let you all go. If this video has been important, or you think you've maybe learned something here, which is my goal, share it. Get it out there, and I can always use a thumbs up. Makes me feel good. With that said, I'll see you at the end of the day.